Very good evening, friends. Today we have the privilege of having with us FCMA Yogesh Chatwani ji, who is an insolvency professional as well. In case you have been watching our YouTube channel, you must have witnessed some of his earlier videos also on case studies and various other subjects. So today we requested him to guide us on the case studies, particularly relating to CIRP, liquidation, pre-pack, etc. And he was kind enough to accede to our request. So with this, it is over to FCMA Yogesh Chatwani ji, NIP as well. Please, sir.
Thank you.
I would like to mention here that he scored one of the highest marks in this examination. Please, sir.
Thank you, Gupta sir, for giving me this opportunity. And happy evening to each one of you. Good evening to each one of you. And I convey my greetings on the occasion of this Navaratri festival. So I pray Almighty for your success in first attempt of this limited insolvency examination. Now, actually, as you are aware, this limited insolvency examination and the valuation examination, day by day, it is becoming very tough to clear that. First, actually, syllabus change was introduced in both these exams, followed by cooling off period of 2 months. And going forward, from few days from now, actually, fees of this exam will also be increased to 5,000 rupees plus GST, which is at present 1,500 rupees plus GST. So, since you have already made your goal to become a limited insolvency professional, what I suggest each one of you to please devote at least 150 to 200 hours exclusively on for preparation of this exam. I know each one of you are a very busy professional, and apart from that, at our age, actually, we have a responsibility, domestic responsibilities also. But nothing is impossible in this world, I will say, if we make a goal and if we actually prepare very well for that, then time is not the constraint, at least according to me. So, as Gupta Sahab told, just for your information, I after my superannuation from Indian Oil Corporation Limited in June 2021, I first cleared this IP exam in October 2021 in my first attempt with 88.25% marks, which, as Gupta Sahab told, it is considered to be the highest mark in this exam. And thereafter, I also passed valuation exam in February 2022, that too in my first attempt with 71.5% mark. So why I am informing that, actually at my age, I do not require any appreciation, but just I want to inform you that if you make a goal, then nothing is impossible. Just you make the efforts, and Almighty is there, Mata Rani is there to help each one of you. So with this brief introduction, we will come to the subject. So today's subject is on case studies. So case study, as you are aware, has been placed greater emphasis in this exam now. You will be asked around 35 questions from case studies, 35 MCQ, and each will have weight of 2%. So what is the difference between earlier syllabus and the revised syllabus is the more emphasis on the case study. So now if you if you have fixed a goal to pass this examination, you will have no other alternative but to go through the provision of law meticulously, because in a case study, even if your one answer to one question is incorrect, you will straight away lose 2.5% mark, which was earlier actually 1.25% mark. So now it is increased. So out of 35 minimum, you have to give correct reply to minimum 25 to 30 questions. Otherwise, it will be very difficult to pass this exam. And for that, you will have to go through the provisions of law from the Bare Act meticulously. So if you read certain books or certain MCQ and prepare from MCQ, probably it may not help. First, you will have to go through the Bare Act meticulously, because see, as Gupta Sahab was telling in the beginning, they are asking question in an indirect manner. Yeah, if you are practically doing this assignment, so how you will deal with a situation. So for that, what is required is you have to go through the provision of law, first of all, meticulous. So what I have prepared these questions around 30 MCQ, as ever, keeping in mind that only. So what I will do, I will share my PPT with you. First, I will share this case study, text of a case study. And for your convenience, what I will do, I will upload in a chat box also, so that you can download it. Just give me a minute. So now I have uploaded this text of a case study, which I have shared in screen also. I hope it is visible to each one of you. May I request one of you to please confirm means my text of my CS is visible to each one of you?
Yes, sir. Yes, sir. It is visible. CS1
okay.
PPI. Yes.
Yeah. Okay. Thank you very much, sir. And another thing, I have already uploaded this text in the chat box, so you can also download it. This first, my first case study is on pre-package insolvency resolution process. As you are aware, this new provision relating to PPIRB are incorporated in IBC effective from 21 onwards. So it is a new development, and it is covered in your new syllabus, and at least one case study you will get on PPIRB. So I will now read this text for your benefit. So Mr. Jed was employed with a prominent shipping company, Messrs. J Limited, for a period of more than 20 years. Messrs. J Limited is a business conglomerate having more than 50-year-old business in marine services, ports, logistics, and custom clearing agent also. So Mr. Jed gained rich experience during his tenure with Messrs. J Limited in shipping business, particularly in imports and export clearing formalities. Mr. Jed recently resigned from Messrs. J Limited with the aim to establish his own business. So immediately after his release from Messrs. J Limited, Mr. Jed obtained a license to act as a ship general at various ports in India as well as outside India. So a ship general, as you may be aware, its role is just like a grocery shop. So these vessels which are calling at different ports, they will certainly require grocery and other items of daily use, like FMCG items and all. So that will be provided by a ship general at various ports in India. So these Mr. Jed had made a aim to not only supply these items at Indian ports, but outside India also. That goal he had made. So for this purpose, Mr. Jed established Messrs. SC Private Limited and completed formalities for its incorporation under Companies Act 2013. So Messrs. SC Private Limited subsequently obtained e-certificate, that is Udyam Registration Certificate, and thus became an MSME. So as we are aware, this PPIRP is applicable only to the MSME units. So the initial capital contribution in Messrs. SC Private Limited was made by Mr. Jed, his relatives and friends. So Mr. Jed always nurtured an ambition to make Messrs. SC Private Limited a global company. So Messrs. SC Private Limited therefore presented attractive growth-oriented business plans before its bankers borrow money. So looking at the experience of the promoters of Messrs. SC Private Limited in the shipping business, particularly Mr. Jed, and the attractive business model in shipping industry, the company faced no issues in getting financial assistance from its bankers. Messrs. SC Private Limited generated handsome revenue during its initial years of operation. However, subsequently, the company became victim of adverse business environment, particularly in logistics, due to one after another events like pandemic, Russian invasion of Ukraine, etc. So in view of this, of late, Messrs. SC Private Limited has committed default in making repayment of loan to its bankers, which is rupees 50 lakhs for principal plus unpaid interest on it on a cumulative basis. So to avoid further damage, the directors of Messrs. SC Limited have decided to file an application for a commencement of a PPIRP process. So directors of KMP of Messrs. SC Limited have sought guidance from an advocate on formalities for initiation of PPIRP. So you as an advocate are approached to guide Messrs. SC Limited on certain law provisions as per the given questionnaire. So this is the case study. This is the text of a case study. And I have already shared this text of case study in the chat box. So you can also download. It may help you while we are doing MCQ or questions based on this case study. So I will now share my presentation. So I hope it is visible.
Yes, sir, it is visible.
Okay, sir. So we will start with the pre-package insolvency resolution process. I am not able to see Mr. Gokul. Gokulji, it is visible to other participants, sir.
Yes, it is very much visible, sir.
I got a message from Mr. Gokul stating that it is not visible. So, and this
because
is
he is in Muscat, so maybe it takes time to reach Muscat.
Okay, understood. Okay, now it seems it is visible. So this is the first question. As per provisions under IBC 2016 and Insolvency and Bankruptcy PPIRP Rules 2021, a corporate applicant shall make an application for initiating PPIRP process in days along with a fee of days. So we have these 4 options. You have to select the correct option out of this. And I request each one of you to participate. Here there is no negative marking. You make it interactive. You can give reply to this either through chat box or by unmuting yourself, whichever way is convenient to you.
Sir, I have disabled the unmute option because there is a lot of disturbance.
Understood. Okay. So you have
so
to give.
They can interact through chat box only.
Yes. Okay, sir. Noted, sir. So you have to give through chat box only. And we are already getting the answer, and I am happy to see you all are participating, but I request remaining participants to participate in this. There is no negative marking, and almost all have selected this B as the answer. So that is the correct answer. B is the correct answer. That is Form 1 and rupees 15,000. So that is there in PPIRP rules. So that is the correct answer. Now moving to question 2. So as per provisions under IBC 2016 and IBBI PPIRP regulation 21, the financial creditor of corporate debtor not being related parties representing this have proposed the name of the IP to be appointed as RP for conducting the PPIRP of the CD, and the FC of the CD not being its related parties representing not less than S in value of the financial debt to such creditor have approved such proposal in days. So I will again read this question. See, all you may find it slightly complicated, but this type of situation will come in your when you really entered into the profession. So you have to thorough about the wordings used in the BEAR Act. So we will read it again as per the provisions of IBC 2016 and IBBI PPIRP regulation. The FCs of a CD not being related party representing S have proposed the name of the IP to be appointed as RP for conducting PPIRP of the CD, and the FC of the CD not being its related party representing not less than S in value of the financial debt due to such creditors have approved such proposal in this. So we have the 4 alternatives. You take your time and select the correct option. So far, we have received C as the answer. We have A also. So A, C, D, different answer we are getting. So most of the participants have given the correct answer, which is C here. It is not less than 10% of the value of total financial debt of such creditor. And this approval from 66% in value of financial debt required. And relevant form is P3. So that is the correct answer. As per provisions under IBC 2016, IBBI and PPIRP regulation, the RP shall make a public announcement within days of commencement of the process in form days. Yes. So your preparation is very good. Almost all have given C as the answer, and that is the correct answer. C is the correct answer. In normal CIRP, it is 3 days, but here it is just 2 days. CIRP, it is 2 days, so that we have to remember. As per provisions under IBC 2016 and IBBI PPIRP regulation 2021, the RP shall within days of his appointment appoint a registered valuer to determine the days and days of the CD computed in accordance with. So we have 4 options. Which one is the correct? So answer from most of the participants, either it is B or A. So we are now getting C also. See, one valuer, it is relating to fast track CIRP. This is PP CIRP, pre-package CIRP. Any more answer? So here actually this A is the correct answer. It is A, 3 days to fair value and liquidation value and internationally accepted valuation standards. So you have to be very careful whether it is fair value, whether it is liquidation value, whether it is net realizable value, and which are the standards to be used. So I hope you are familiar with which standard to be used in valuation assignment under different processes of IBC. So I hope each one of you is familiar with it. Otherwise, if required, I will explain it in detail. So detailed explanation, is it required, or we can go ahead with the next question?
About, we can go ahead, sir, with the next question.
Okay.
At the end, if people are interested, then we can explain.
Okay. So as per provisions under IBC 2016 and IBBI PPIRP regulation 2021, on or after the PPIRP commencement date, where any person is involved in falsification of books of corporate data, with intent to defraud or deceive any person, he shall be punishable with imprisonment for a term which shall not be less than days, but which may extend to days, or with fine which shall not be less than days, but may extend to days, or with oath. So, okay, Pallavi madam has, without seeing the answer, given the reply. Good that you are well prepared, madam. So, which according to you is the correct answer?
அவரோட பிபிடி இந்த நோலகம் இல்ல ஆல் லெட்டர் சொல்லிடுறேன் லேப்டாப்
So most of the participants have given A is the answer. Any other choice? As I can see, only few participants are taking part in this. It is in your benefit. Make it interactive. So A and D. But correct answer to this is A. It is 3 years. Minimum is 3 years, which can be extended up to 5 years, and a fine of 1 lakh rupees, and it can extend up to 1 crore rupees. So this is the correct answer. A is the correct answer. As per provisions under IBC 2016, IBBI PPIRP regulation, significantly better in relation to resolution plan means that the So choice is between B, C, and D. Any other answer? So correct reply is D. It is significantly better means score of a resolution plan is higher than that of another resolution plan by certain number or percentage is approved by the committee and disclosed in the invitation for a resolution plan. So that is the correct answer. D is the correct answer. As per provisions under IBC 2016 and IBBI PIRP regulation, a resolution applicant may submit resolution plan or plans to the RP through days within the time given in the invitation for resolution plans. We have 4 options. Which one is the correct reply? So different choice between B, C, and D. So in a PPIRP regulation, the mode which is specified is one only, that is electronic means. So going forward, you remember this. It is C is the correct answer. I am sorry, I will correct this. Actually, it is wrong here. It is C actually. So electronic means only. That is the correct answer. C is the correct answer. Then as per provisions under IBC 2016 and IBBI PPIRP regulation, the RP shall submit the resolution plan as approved by the COC to the adjudicating authority within a period of days from the A, C, and D. So in these, we have all the option A, B, C, and D. But the 1 minute, one more response. Okay, C. So A, B, C, D. But correct response to this is C. That is 90 days, and it is from the pre-package insolvency commencement date. So 90 days is the correct answer. So these are the relevant provision actually. So what I suggest, you make it a habit when you come across such MCQ. You make it a habit to go through the relevant provision. So together, actually, we will do that so that it is more clear to each one of you. So just give me a minute. So keep this bare act with you. You make a good PDF file of this, all regulations and all means IBC, which is updated till last date, which is in your syllabus, plus rules and regulations and all. So our first question was relating to filing of the application. So that I have taken from this rule 4. So make it a habit whenever you come across such MCQ, make it a habit of reading the relevant portion from the bare act or rules and regulation, so that you will not forget it. So you have to read it multiple times. Probably if we read one time, we may forget it. So make it a habit to read it multiple times. So here, filing of application, our first question was relating to that. So a corporate applicant shall make an application for initiating PPIRP under subsection 1 of section 54C of the code in form 1, accompanied with affidavit, documents, or record as referred in annexure therein in electronic form, along with a fee of rupees 15,000. So this application is to be filed necessarily in electronic form, and fee is 15,000 rupees. So what is the fee in a CIRP, that you have to remember? That is a normal CIRP. So that is means different fees there are prescribed for FC and OC. So here actually fees is just 1,000 rupees. Whoever is the corporate applicant, he has to pay 15,000 rupees is the form as the fees, and form is form 1. So that was our question 1. Second question,
Chatwani ji, please
yes,
guide the participant as to how this fees has to be paid, whether online or what is the mode of payment of fees, because they may ask this also.
Okay. So mode of payment, see, means through Chalan actually we have to pay. It is to be paid through Chalan, and
Okay.
mode of payment. Yes, sir.
Any Chalan number or something like that, whether it is prescribed or there?
Sir, that is not actually specified in this, but whoever is dealing with it, like advocate and all, so they are well familiar with it, sir.
Okay. Anyone from the participants? Anyone from the participants who can tell? This question was basically for the participants. So you can write in chat box, or you can discuss it in the group. Please, sir, continue, sir.
Yeah. So we have received one response also by electronic means. Yes. So here probably they may have mentioned also. Just a minute. So this, sir, as you can see on page 12, it is there, annexure XV. Proves that the specified application fee has been paid. So that is to be, means annexure 15 is the relevant annexure, sir. So these are the annexure.
Okay, sir. Participants can study this and they can share in the group. Please, sir, continue, sir.
Okay. So we will go to now this regulation. So we will skip this Hindi version. So our second question was from regulation 14.4, regulation 14.5, and section 54A2E. So that we will see. So this is 54A2, and we have to go to E actually. So it is the financial creditor of the corporate debtor, not being its related parties. So that is important, note being its related parties representing such number. So such number in such manner as may be specified. So that is under the regulation. I have proposed the name of the insolvency professional to be appointed as resolution professional for conducting a PPIRP of the CD, and the financial creditor of the CD not being its relating party representing not less than 66%. So this 66% is coming from the IBC, and the remaining part of the question is coming from the this regulation of 14.4 and 14.5. So that under IBC it is mentioned that it will be specified. So specified means when word comes specified, it will be under the regulation. Prescribed means rule. So 14.4 says the financial creditor who are not related parties of the CD and have not less than 10%. So that 10% is coming from the year, and approval of the terms of appointment of resolution professional under clause E of subsection 2 of section shall be in form P3. So this is how question can be formed. So you have to read these rules, regulation and code in continuity with each other. So that is question 2. And our question.
There is another question, sir, for participants.
Yes, sir.
How they will calculate the total financial debt? Because regulation 4 says total financial debt. So how they will calculate? Suppose they've been appointed as an IP. So how they will calculate this total financial debt? Whether from books or from claims, from where? Please show it again, sir.
Yeah, 4. Ne?
Yes, sir.
Regulation 4 or section 4?
Regulation 4, sir. Regulation.
Regulation 4 of PPIRP is relating
yes, sir.
Essential supplies, sir.
Okay. Now, Palviji is saying claim as on initiation date, but actually no application has been filed as yet. So that was the reason for asking this question. Claim will be as per the books only, because only books are available. There is no initiation date. Initiation date is only when the application has been filed, but application has not yet been filed. They are just approving the name of the RP.
So Prakash ji has told books
So
of
basically list of creditors वो खुद बना रहा है ना.
Yes.
He is making the list of creditors.
Yes.
And he is calling the meeting.
Yes.
So he himself is giving कि उनके क्या claims हैं क्या नहीं है. On the basis of that, it will be taken.
Yes,
it is there in regulation 14.1.4.
Yes. Thank you, Sunil ji. Because they are asking questions like this. They will not ask simple questions.
Right.
So they want you to read between the lines. So participants, be very particular about each and every word, and you have to put questions to yourself. Okay, what more they could ask? Then what is apparent? What is apparent, they will not ask. They will go deeper into it. Please continue, sir.
Moving forward, actually, next question was relating to the public announcement. So here is that public announcement. So means relevant provisions are 19.1 and 19.2a. So resolution professional shall make a public announcement within 2 days of the commencement of the process, and this means it is in form P9. So here actually we have to remember this list of claims is means it is there, but this public announcement it is not in a newspaper. So that is the difference here. A normal CIRP it is newspaper. So here it is in form P9 sent to every creditor listed in form P2 and sent to information utility and published on the website if any of the corporate debtor and the board. So this is the process of public announcement that is important. So here there is no mention about publication in the a newspaper which is there in normal CIRP process or liquidation process. So that is the main difference. Now moving forward, our next question. Question 4 was from regulation 38 and
Sunil ji, you would like to add anything here regarding public announcement?
नहीं सर, पब्लिक अनाउंसमेंट के लिए सर ने बता ही दिया ना कि देयर इज नथिंग इन द एक्चुअली क्रेडिटर्स की लिस्ट है, उसी को सबको देना है उसने.
हाँ जी, ठीक है सर.
तो उनसे ही वो इनवाइट करेगा, कोई ऑब्जेक्शन है तो दे विल गिव द ऑब्जेक्शन एंड देन ही विल मॉडिफाई.
So that is how I made it a point to inform that, because that is a deviation.
Yes, sir.
That is deviation from the normal process. Generally, public announcement means we think it is in newspaper, but that is not the case in PPIRP, sir.
Yeah, thank you, sir.
So next is regulation 38. So a resolution professional shall within 3 days of his appointment appoint 2 registered valuers to determine the fair value and liquidation value of the corporate debtor. And then it is in regulation 39(1)(a). The registered valuer appointed under regulation 38 shall submit to resolution professional an estimate of the fair value and liquidation value computed in accordance with the internationally accepted valuation standards. So these you have to very particular whether it is in accordance with the internationally accepted valuation standard or it is as per company's registered valuer and valuation rules 2017. So if you see, if you go through the processes under CIRP, it is internationally accepted valuation standard. Under liquidation process, it is company's registered valuer and valuation rules 2017. Under fast track CIRP, again it is internationally accepted valuation standard. And here under PIRP, it is again internationally accepted valuation standard. Means under liquidation, what valuers are required to do is to ascertain the estimate of net realizable value. And in other processes, it is fair value and the liquidation value. So there are different types of value like fair value, liquidation value, and the net realizable value. Similarly, there are different standards also. One is internationally accepted valuation standard. Another is a company's registered valuer and valuation means rules 2017. So what is the difference? So as you may be aware, presently valuation bill 2020 is pending before the parliament. So that is not passed by the parliament. So there is no regulatory authority or a regulator for the permanent regulator, I will say, for this registered valuer. So in the interim period, under this company's registered valuer and valuation rule, IBBI is recognized as the authority. So it is an interim measure. So once that bill is passed, then a new regulator will be created for this registered valuers also. Another thing is as per guidance which is provided under this company's registered valuer and valuation rule, which are notified under section 247 of the Companies Act 2013. So there actually it is said a central government will publish the valuation standard. But since that, as I told you, rules are that a bill is pending, so central government has so far not published any valuation standard. So as per again another rule in the same that valuation rule, the guidance is in the interim period, a registered valuer will do the valuation based on either internationally accepted valuation standard or the valuation standard recognized by the RVO or registered valuer organization of which he is a member. So as you are aware, in India, as of now, there are 16 RVOs, registered valuer organization, that are recognized by the authority or the IBBI. So, and in India, Institute of Chartered Accountants of India, they have published the valuation standard. So some RVOs out of these 16, they have recognized this ICAI valuation standard, and some others have recognized internationally accepted valuation standard. So that registered valuer means he will have to ascertain exactly which standards are recognized by his RVO. So there is a difference between these standards. So if you get time, what I suggest, if you have time provided, what I suggest, you may download this international valuation standard and this ICAI valuation standard. So that will help you actually. So here actually guidance is as per the internationally accepted valuation standard. Now moving forward.
Sir, here I have a question for the participants. Suppose there is a company which does not have any inventory, and even fixed assets are just say 50,000 or 25,000. So in that case, whether you will be appointing valuers for the participant, this is the question. And suppose registered valuer is saying, I'll charge 1 lakh rupees for valuation. There is no, because it's a software company, so there is no inventory as such. And even fixed assets are of very nominal value. Then what will you do? And who will bear the cost? So is it mandatory? It could be worded in some other type. Okay. Fixed, there is no physical inventory, and fixed assets are also very nominal. So then is it mandatory or is it not mandatory? If it is mandatory, why? If it is not mandatory, why? So you can discuss this question in the group after proper study.
So, sir, may I give you the reply, sir, to this?
Yes, yes, sir. Sir, you will always give the reply naturally. Yes, sir, please.
So, for a benefit of all, see,
Yes,
actually means even if, as Gupta sir told, even if inventory is not there or sizable fixed asset or current assets are not there, then actually then also registered valuer is supposed to appoint the means registered valuers, even if it is not there. So see, when a company goes into liquidation, so what is reflected in the balance sheet of a company or the financial statement of a company is the tangible asset and intangible asset, which are means internally generated. Those assets are not reflected in the balance sheet of a company. So going by the guidance provided under the accounting standard or Ind AS or IFRS, that is internationally financial reporting standards, the internally generated intangible assets are not reported in the financial statement of a company. So no RP will take a risk. Supposing company has gone into say PPIRP process, company is undergoing PPIRP process or a CIRP process, but still there are chances that company, as Gupta sir told, that is a IT company. So IT company, although assets are not there, but that company has earned goodwill or earned the reputation, and it has a very good customer base. So like we can take example of e-commerce company. So e-commerce company do not have Ola and Uber. If you take the example, they do not have any sizable asset, but they have a strong customer base on which their valuation is very high. So according to me, no RP will take the risk of not appointing the registered valuers. That is my understanding on this, sir.
Perfect, sir. Perfect. Anji, please continue, sir.
Okay. So we will move forward. So we will go to next question was relating to section 71. So that we will go. That was regarding the punishment. So that we will refer to section 71 now. Actually, means for a valuation of the intangible asset in such cases is a very challenging task because whatever is reported in the financial statement, probably in some cases, a value of both assets are not reported. That is intangible asset is means very high actually. So that is the case. And now actually thinking is going on, or suggestions are going on. There should be some guidance in the accounting standard for taking this value of intangible assets into books of account. So that what process is going on. Before we move to that particular section, I just want to show you this provisions of chapter 2, 3, 4, and 7 to this chapter. So these means chapters, provisions under these chapters are applicable to PPIRP also. That you have to remember. So SAVE as provided under this chapter. The provisions of section 24, 25A, 26, 27, 28 and the provisions of chapter 6 and 7 of this part shall apply to the PPIRP subject to the following changes. So there is no doubt that this means penalty related provisions are applicable to PPIRP also. So now it is section 74. So that quickly we will go to section 74. Sorry, it is not 74. Just a minute. So it is 71. Sorry, I'm sorry. So that is 71. Punishment for falsification of books of corporate data. So here it is. So it will not be less than 3 years, but which may extend to 5 years, or with fine, which shall not be less than 1 lakh rupees, but may extend to 1 crore rupees. So this is the relevant provision. Then we have regulation 42. So we will go to regulation 42. So so here it is significantly better in relation to resolution plan. Means the score of the resolution plan is higher than that of another resolution plan by a certain number of percentage as approved by the committee and disclosed in the invitation for resolution plans. So here actually see these different illustrations are given. So this is the choice of any examiner. So they can directly take or directly frame questions out of this illustration, which are incorporated in the regulation. So wherever such illustrations are incorporated, whether it is means this regulation or another act or rules and regulation, you please make it a point to go through it meticulously. So it may help you in your exam. So from this illustration itself, many questions can be framed. It is very easy to frame it, particularly in case studies. So that is 42.2. And then another question is, next question was from regulation 46. So it was relating to this resolution applicant may submit resolution plan or plans prepared in accordance with the code and this regulation through electronic means within the time given in this. So that electronic means means plans to be submitted only through the electronic means. So there is no other means. specified year. So that we have to remember. And then last question goes from section 54D2. So that we will go to 54D2. So this is 54. So 54D2. So without prejudice to subsection 1, resolution professional shall submit the resolution plan as approved by the committee of creditor to the adjudicating authority of section within a period of 90 days. So that we have to remember. So incidentally, what is the period of completion of PPIRP? Two questions which are not there in this. Number one, what is the threshold for this threshold for default under PPIRP? And number two, period of completion of PPIRP. So yes, it is 122 days and default 10 lakhs. Very good. So you all have prepared very well, and I wish you all the best for your exam. So what we will do, we will quickly go to a next case study, second case study. So this is again on FTCIRP. This is with you. Mr. A and Miss B formed a private limited company, Messrs. Z Private Limited, to set up a new business of ladies' garments and allied accessories. The initial capital contribution was made by Mr. A and Mr. A, Miss B, and their relatives and friends. Miss Z Private Limited qualified as a small company in line with the definition of small company incorporated under the Companies Act 2013. Messrs. Z Private Limited was able to generate a good business in their initial years. However, the company was unable to maintain the pace of growth due to variety of reasons, including cutthroat competition, not keeping pace with the changing needs of its customers, general recessionary condition due to pandemic, etc. So therefore, the company defaulted in making payment on making repayment on several occasions in relation to the repayment of loans to the banks and financial institutions. So Messrs. Z Private Limited owed 400 lakhs, including interest, as at 31st March 2022, which included unpaid loan unpaid loan to 5 banks at 225 lakhs. So due to consistent defaults by Y during 21-22, the Y Bank gave notice to Messrs. Z Limited, recalling entire outstanding loan amounting to 25 lakhs within 15 days on 1/4/2022. Messrs. Z Private Limited defaulted in making payment to Y Bank. So Y Bank filed application for commencement of FTCIRP on 30th April 2022 under the relevant provisions of IBC. So AA, after following up due procedure, admitted application for FTCIRP on 5th of June 2022. So Y Bank proposed the name of Ms. T to act as IRP, which is approved by the AA. Ms. T made a public announcement on 8/6/2022. Ms. T constituted a COC on 30th June 2022, and the first meeting of COC was held on 15th of July 2022. So the COC proposed the name of X to act as the RP. Ms. T and Mr. Z, upon verification of claims, maintained a list of creditor as per following details. So as we can see here, there are three financial creditor and one is operational creditor. So you as an advocate are approached to guide the IRP or RP on certain law provision as per the given questionnaire. So this is the case study, and I will now share the relevant question from this. So fast track CIRP. So iBank, which is also one of the members of COC, filed an appeal before National Company Law Appellate Tribunal to set aside the order of adjudicating authority regarding admission of FTCIRP on the ground that its case credit account with company is regular and there is no default. Will application of iBank survive? So there are four options. Which one, according to you, is the correct answer? Like this question can come in your exam, and this particular question I have taken from the model question paper. So I hope each one of you have downloaded that model question paper. You make a preparation from model question paper. Chances are you may get 5 to 10 MCQ directly from that, 5 to 10%. So it may help you in your exam. So yes, that is the correct answer. No, as default has occurred under section 7 of IBC, and another FC does not have any right to intervene. So means if you go through the provisions of section 7 meticulously, then their guidance provided is either one financial creditor or multiple financial creditor jointly, they can approach the adjudicating authority for a commencement of a CIRP. And this section 7 is very much applicable to fast track CIRP process also. So when we will refer to law provision, we will go through it. So here correct answer is B. No, as the default has occurred under section 7 of IBC, and another FC does not have any right to intervene. Next is as per provisions under IBC, the period of FTCIRP applicable to Jet Private Limited in these cases days, which can be extended for a further period of days, duly supported by a resolution passed at meeting of the COC and supported by a vote of days of the voting share. So whatever response we have received, all have given C as the answer, which is 90 days, 45 days, and 75%. So that is the correct answer. It is 90 days, 45 days, and the 75%. It is not 66%. In case of FTCIRP, it is 75%. As per provisions under IBC, the RP cell within days appoint to determine fair value and liquidation value of the CD computed in accordance with the So here it is between A, C, and D, and B also. So we are getting different answers. Correct answer, you please note, it is C, that is 7 days of his appointment. And as I told you earlier also, in case of FTCIRP, only one valuer required here, not two valuer. And valuation to be done as per the internationally accepted valuation standard. Under a liquidation process, I will again repeat, under liquidation process, it is the net realizable value and valuation to be done as per company's registered valuers and valuation rules 2017. So that you have to be familiar with. So I think this means Section 247 of the Companies Act 2004, means Companies Act 2013. It is in your syllabus also. As per provisions under IBC and IBBI fast track CIRP regulation, the RP shall submit the resolution plan approved by the COC to the adjudicating authority at least days before the maximum period permitted under Section 56 of IBC. Here also it is A, B, and D. So correct answer is 15 days. You have to remember this. It is not 30 days. It is not 7 days. It is 15 days. So you have to remember that. As per provisions under IBC and IBBI fast track CIRP regulation, a dissenting FC means, what is the meaning of a dissenting financial creditor? So A, C, different answers we are getting. These actually meaning of a dissenting shareholder, it is common under CIRP regulation also. So traditionally we believe dissenting means FC who has voted against the resolution plan. But that is not the case. It is both. That C is the correct answer. FC who voted against the resolution plan or abstained from the voting for the resolution plan approved by the COC. So C is the correct answer that you have to remember. C is the correct answer. As per provisions under IBC and IBBI fast track CIRP regulation, liquidation value means, what is the liquidation value? We have received reply from A, B, D, different answers. So B is not the correct answer. See, it will not be determined on the LCD or liquidation commencement date. Because when registered valuers are appointed, that liquidation process has not commenced yet. During it is during CIRP regulation. So once the CIRP is ongoing, there is no question of determining the value on LCD, that is liquidation commencement date. And see, liquidation value means realizable value. It is not a liquidation value. So option D is also not correct. So correct option here is A. It is estimated realizable value of the asset of the CD if the CD were to be liquidated on the ICD. For a IP actually, or resolution professional, most precious is the asset and assets of the company. So it is required that the resolution professional is aware about the meaning of fair value, meaning of realizable value, meaning of liquidation value, and which are the applicable standards. So in real life, real assignment or real life scenario, it will help a lot. So these are the relevant provisions for this question 25 to question 30. So as we have seen for a previous case study, you may refer to this particular section. Since time is less, what we will do now, we will go to this general law questions. So here there is no case study. Directly we will do the MCQ, because see, in 2 hours means it is not possible to have case studies. So we will start with SEBI regulations. So SEBI regulations also, many times in exam you may get a case study from a SEBI regulation itself. So we will start with SEBI regulation. So as per SEBI ICDR regulation, an issuer shall be eligible to make an initial public offer, that is IPO, only if it has a net worth of at least this in each preceding days full years of 12 months each, calculated on a restated and consolidated basis, apart from other criteria. So which one is the correct answer? See, the only difference between other profession and IP profession is this only. In other profession like chartered accountant or post accountant or company secretary, only limited exposure is required. But here actually we have to refer provisions under means different acts. So that is a thing. So we have received A, B, C. So correct answer is 3 years. That is the correct answer. So A and B are eliminated, and it is 1 crore rupees. It is not 3 crore rupees. So C is the correct answer. This ICDR, as you may be aware, it is an issue of capital and disclosure requirement regulation. So it is a very big regulation. As per SEBI ICDR regulation, anchor investor. So in our common means day-to-day life, we come across this word anchor investor many times on business channel also. So what is the meaning of anchor investor? So anchor investor means a qualified institutional buyer who makes an application for a value of this in public issue on the main board made the book building process. So here different meanings are there. Main board, as you may be aware now in stock exchange, there are different boards. So this is related to main board, and it is through book building process. So which one is the correct answer? So it is between A, B, and C. But going forward, you remember it is D which is the correct answer. When it is an anchor investor, actually means what is, yes, Pankaj ji has given the correct answer. It is D. D for Delhi is the correct answer. It is at least 10 crore rupees. Then only he will qualify as an anchor investor. Anchor means leading investor. As per SEBI ICDR regulation, green shoe option. So these are, see, these are fancy word, and these are means choice of the examiner. Any examiner would like to frame question based on these fancy words. So green shoe option means an option of allotting equity shares. Dash the equity share offered in the public issue as a dash stabilizing mechanism. Answer we have received is B and C also. Yes, so Gopulji, Pallavi madam, and Prasannaji, they have given the correct answer. It is C. It is means green shoe, as its name highlights, it is excess actually. So that means A and B are eliminated. So answer is between B and C. Since it is a price stabilizing mechanism, it will be necessarily post listing. So that is how you have to remember. It is in excess of the equity shares offered in the IPO as a post-listing price stabilizing mechanism. As per SEBI ICDR, book building means what is meant by book building process. So this is also a common term. So what I suggest means I also understand these regulations are very voluminous. So at least you go through the definition part from each regulation. You will have reasonably good understanding about the regulations. So means regulation 2 is very important, which is on definition part. Yes, we have got correct answer. Prasannaji. So B and D, but correct answer is B for Bombay. It is a process undertaken to elicit demand and to assess the price for a determination of the quantum or value or a coupon of specified security or IDR as the case may be. So what is the meaning of a coupon here? Can anybody inform that through chat box? What is the meaning of a coupon here? These regulations are relating to ICDR. So what is the meaning of coupon? Yes, Arundhati madam has given the correct answer. It is a rate of interest payable. Yes, written also in a way it is a correct answer. So here, since it is IDR, that is Indian Depository Receipt. So that is how this coupon is also specified. So B for Bombay is the correct answer. Next question is as per SEBI delisting of equity shares regulation. So here this is a different regulation. It is not ICDR. It is a delisting of equity shares regulation, which is also there in your syllabus. The bidding period for exit opportunity shall start not later than days from the date of the detailed public announcement and shall remain open for. So at the time of a delisting, as you may be aware, an exit opportunity is to be provided by the listed entity, so that whichever shareholder, if they are not interested to continue, they can exit from the company. So that exit opportunity is to be given. So what is the time period for that? So we have received only one answer so far from Vinayakanti. So any other answer? So all have given a C as the answer, but I am afraid that is not the correct answer. Correct answer is B. It is 7 working days and 5 working days. And so it should not be later than 7 working days from the date of the detailed public announcement, and it shall remain open for at least 5 working days. So here you have to note, it is not 5 days, it is 5 working days. So that is the correct answer, B. As per SEBI delisting of equity shares regulation, the discovered price for exit opportunity shall be determined through the discovered price for the exit opportunity. So when means exit opportunity is provided, naturally price is to be fixed. So we have answer as A and D. So Prasannath Jain ji has given the correct answer. It is a reverse book building process. So you have to remember A is the correct answer here. As per a SEBI regulation, now this is another regulation, that is a substantial acquisition of shares and takeover. So it is relating to a business combination, mergers and acquisition. So substantial acquisition of shares and takeover regulation. Frequently traded shares means so under this SAST regulation, as you may be aware, there is a definition of what is a frequently traded share and what is infrequently traded share. So that is incorporated under this regulation. So what is a frequently traded shares? Yes, Arundhati madam and Richa madam, Vinaykanji, yes. You all have given the correct answer. That is at least 10% of the total number of shares traded in 12 calendar months. Yes, Pallavi madam, that is the correct answer. So A is the correct answer. It is not 26 weeks, it is 12 calendar months, frequently traded shares. As per SEBI, again, SAST regulation 11, fugitive economic offender shall mean an individual who is this fugitive economic offender under this. C, okay. Any other choice? C, D. Yes, Pallavi madam, Arundhati madam, and Amit ji, you are right. It is declared under Section 12 of the Fugitive Economic Offender Act 2018. So this is relatively a new development, recent development. So D is the correct answer. And here are the relevant provisions. You may go through it through the relevant provision. Now, how read these regulations? It is very difficult. These regulations are very voluminous. So at least you may prepare a index part, because what I see, what I find actually under this regulation, even index is not there. It is running into 500 pages. So it will be very difficult to locate one particular provision. So it is better to prepare an index like this. So this is the coverage which is there. This is just one example. So this is a coverage under SEBI ICDR regulation. So there are as we can see, there are just a minute. So there are around 12 chapters in this, and each chapter is having a different parts, and means under different parts various regulations are there. So at least you become familiar with this coverage, so that you know exactly what is covered or incorporated under this. So this IPO on main board, so that we have seen. So what are the eligibility requirement for IPO? What is issue of convertible debt instrument and warrants, promoters contribution, lock-in and restriction on transferability, appointment of a lead manager, other intermediaries and a compliance officer, then pricing part, issuance of condition and procedure. So that is relating to IPO on main board. Similarly, we have this rights issue, then further public issue, further public offer or FPO. Then we have preferential issue, then qualified institutional institutions placement or QIP, and then qualified institution placement, means that is continuing from the previous slide. An IPO of Indian Depository Receipts, so that is IDR issue. Similarly, this right issue of IDR. Then there is a special board for IPO by SME, that is small and medium enterprises. And we have this new board, which is relating to innovators growth platform. So this platform is mainly provided for a startup entity. So that is innovators growth platform. So in all, there are 3 different platforms or board, whichever name we may call it. One is main board, another is for small and medium enterprises, and another is for this innovators growth platform. Then we have this regulation 293, 295 on bonus issue, and then power to relax strict enforcement of regulation and miscellaneous. So like that, if you prepare this index, it may help you when you have some, you want to refer to some particular provision, then it will become very easy. Now we will go to these general acts. It is not possible to cover all the acts. So these MCQ are from Transfer of Property Act, Surface Act, and Companies Act 2013. So first we will start with this transfer of property. So under transfer of property, charge can be created by 4 options. Charge can be created by we have B and C as the answer. A also. Charge can be created by both. It is through act of party as well as through operation of law also. So either A and B above, either of A and B above is the correct answer. So it can be voluntarily, that is through act of parties, or through operation of law. So that is a correct answer. So C is the correct answer. Days of the following properties can be transferred under the Transfer of Property Act 1882. Days of the following properties can be transferred under the Transfer of Property Act 1882, which is a very old act. So, okay, very good. So most of the participants have given D as the answer. So you are familiar with this provision. Happy to see that there is a negative listing. So it is not a C, right to future maintenance cannot be transferred. Right to future maintenance cannot be transferred. The question is, can be transferred? So that is, you have to read accordingly. So answer is D. None of these can be transferred actually. These all are in the negative list if you go through it. So that D is the correct answer, not C. As per Transfer of Property Act, instrument means. As per Transfer of Property Act, instrument means. So, what is the meaning of a testamentary instrument? Because here it is relating to mainly testamentary instrument. So what is the meaning of a testamentary instrument? Can may I request one of you or whoever is knowing to mention it in the chat box? What is the meaning of a testamentary instrument? Yes, it is will. Richa madam has given the correct answer. So you have to remember actually the will be regulated based on Indian Succession Act, not based on Transfer of Property Act. So correct answer as Pallavi madam has given. It is a non-testamentary instrument which are covered under the Property Act. So going forward, you remember a testamentary, as a madam has given reply rightly. It is Richa madam has given reply rightly. It is relating to will of a person. So there actually Indian Succession Act will be applicable. Not wherever any specific law is there. So provision of that specific law will be applicable. In Transfer of Property Act, only act of the parties, that is voluntary transfer, will be applicable. So like acquisition, means acquisition of property in the public interest by the government. So that will be regulated by the in that particular act, provisions under that Acquisition Act, not under Transfer of Property Act. So only act of the parties are covered under Transfer of Property Act, and that means the transaction which are under act of means what you call this operation of law are not covered under the Transfer of Property Act. So that you have to remember. So here correct answer is B for Bombay. It is non-testamentary instrument. Under SURFACE Act, an asset reconstruction company can offer security receipts under SURFACE Act 2002 to DES. So this SURFACE Act is repeated, that is typographical error. So which one is the correct answer? Asset Reconstruction Company or the ARC can offer security receipt under the SURFACE Act today. See, of you have given a C as the answer, which was correct prior to amendment. Now this act is amended. See, I have quoted the particular provision here. If time permits, I will take you. Correct answer here is qualified buyers. It is not a qualified institutional buyers. So you have to remember this. And earlier it was a QIB, but now it is amended to QB. That is qualified buyers. So that relevant means provision I have quoted in this PPT. So that you have to remember, or in the that PDF file which I have forwarded. So B is the correct answer. Under SURFACE Act, which of the following is not a ground for cancellation of certificate of registration granted to an ARC by the Reserve Bank of India? So as you are aware, these ARC are recognized by the RBI, Asset Reconstruction Company. B is not the correct answer. Huh? When ARC ceases to receive or hold any investment for a qualified buyer. So on this ground, actually, registration can be cancelled. So that question, if you see, it is not a ground for cancellation. So where you have to read the MCQ very carefully. So that is B for Bombay is not the correct answer. Similarly, C is also not the correct answer. When the ARC fails to maintain accounts in accordance with requirement of any law, so that is a defaulter. So that that is solid ground for cancellation of the registration. Here question is not a ground for cancellation. So it is in negative sense. So that again A is also not the correct answer. And because see that ARC are registered by the RBI. So if registration authority, if it gives certain direction and if ARC fails to comply with it, naturally what alternative RBI will have to cancel the registration. So a D here is the correct answer when ARC has incurred a loss for a year. So if loss is incurred, see ARC, as we know, it is a very challenging business. So there incurring loss is a normal phenomenon. So D for Delhi is the correct answer when ARC has incurred a loss for the year. All other are the solid ground for a cancellation of certificate of registration granted to an ARC by the RBI. So you have to remember that. Under SURFACE Act, the appeal against order of DRT be entertained by DRAT, that is the Debt Recovery Appellate Tribunal, only when the borrower has deposited with the Appellate Tribunal days of the amount of debt due from him. Comparatively, this is the easy question, I will say. This is the basic requirement which each one of you should remember. It is now not left to the appellate tribunal to decide. So D is the incorrect answer. It is not 25% also. So that is also the correct, not correct answer. Correct answer here is 50%. So C for cat is the correct answer. It is 50% of the amount. as per provision contained in Chapter 20 under Companies Act 2013, winding up, which of the following dates shall be paid in first priority to all dates by the liquidator? So slightly a longer question. Please take your time and select the correct answer. In exam, you may get questions like this also. Okay, B for Bombay. So, yes, Gokulji, Prasannaji, they have given A is the answer. And we have D also. So, winding up, it is 12 months that you have to remember. It is not 6 months, it is not 4 months, or it is not 3 months. So 12 months is the correct answer. A is the correct answer. As per provisions contained in Chapter 20 under Companies Act, winding up, workmen in relation to a company means employee of the company, being workmen as defined under the DES Act. Yes, Gokulji, Prasannaji, Arundhati Madam, Kamya. Yes, you all are aware about this. B for Bombay is the correct answer. That is Industrial Dispute Act 1947. So B for Bombay is the correct answer. Yes, Poonam Madam, B is the correct answer. So these are the relevant provisions of respective acts. So you can go through it, which is there in your PDF also. So with this, from my side, it is over. Any questions on whatever we have covered so far? Mainly case study questions, it will be from the four corners of the law provision only. And it cannot be different from the law provision. So a need means you should actually go through the law provision meticulously. Thank you, Pallavi Madam, Prakash Ji, Chakrabarty Ji, for your kind words.
So thank you very much, sir.
Thank you, sir. Thank you.
This is the time to say thanks. It was really wonderful. I also enjoyed the session.
Yes.
And this session was being streamed live on Facebook also. So there were participants there also. So a lot of people are enjoying this session. So, and we look forward to more such sessions. Thank you very much, sir. Thank you.
Thank you.
So with your permission, we are ending the meeting now.
Thank you, sir. So kind of. Thank you. Good night to each one.
Good night, sir.